Good afternoon, everyone. My name is Neil Gonaguntla. I'm the president of the U.S.-India Chamber of Commerce. We will be getting started with our webinar shortly. I think we have people still trying to join in, so we'll give them just a couple of minutes, and we'll get started here probably in the next 2 to 3 minutes. All right, thank you. Good afternoon, everyone. Thank you so much for your patience. We'll go ahead and get started with our webinar today. Before we proceed with our program, I want to first thank you for joining us. This is the second webinar in our business webinar series to help small businesses weather COVID-19 and come out strong on the other side of this global pandemic. We recognize that many of you are dealing with difficult business decisions, and we're hoping that our webinar series will help all of you overcome some of the challenges that you're facing. And if we can help you in any way, please don't hesitate to reach out to the Chamber. And if there are any webinar topics that would be of particular use to you or your business, please feel free to email us at info@usicoc.org, and we would be happy to curate webinars around your needs and the needs of our community. On Monday of this week, we hosted our first webinar with Herb Austin, the Regional Director of the Small Business Administration. He helped our members walk through the disaster loan assistance program being offered by the Small Business Administration. If you are not able to join us for that webinar, I just wanted to quickly show you that you can go to our YouTube channel, and at our YouTube channel, you can type in SBA here in the search box, and it will pull up the webinar from Monday, and you can listen to the entire webinar, including the over 30 questions that were asked and the answers that were provided as a part of that program. We hope that that program will be of value to you, and we will continue to have all of our webinars featured there for our members' use and also for your reference. So with that, I'm going to hand the program over to Mahesh. And before we close for the at the end of the program, I will come back and talk to you about a couple of changes to our webinar schedule, and we will update you on the webinar schedule at that time. So with that, I'd like to hand the webinar over to Mahesh. Mahesh Shetty is our former chairman of the U.S.-India Chamber of Commerce. He recently served as senior director, and chief operating officer, as well as chief financial officer for a publicly traded company called SG Blocks. Before that, he was the chief financial officer and the COO of Encore, a wealth management firm here in Dallas. So with that, I welcome Mahesh Shetty, former chairman of the U.S.-India Chamber of Commerce, to introduce David Kohl and also to moderate today's conversation. Mahesh, it's all yours.
Thank you, Neil. Appreciate it. And thank you for all the attendees in today's webinar. It's my privilege and honor to initiate this conversation with David Kohl. David, is a very well-known subject matter expert in insurance. So for people who do not know David, David's expertise in risk management began over 40 years ago as an underwriter, and then ultimately assumed positions of increasing responsibility in both marketing and management. In 1998, he moved to the retail side at Roche Howard, and where he helped build other companies, international insurance operations, and the D&O practice. In 2006, he was nominated to the Assurex International Executive Committee, where he advised the board of directors on international strategy, as well as the selection and ongoing monitoring of international partner firms. In 2010, he was recognized as a Power Broker finalist by Risk and Insurance in the Global Insurance category. And in October of 2013, he created and helped launch FEI Special Interest Group for manufacturing and distribution executives located in DFW. Uh, Outside of his insurance expertise, in May of 2016, David created and was a driving force for the Global Risk Series as part of the Dallas Committee on Foreign Relations. He joined the board in 2017, and then in January of 2019, he assumed the role of president. In addition to his insurance practice, he serves on the advisory board of UTD's Institute of Excellence in Corporate Governance. He's a TFS certified foresight practitioner and risk expert, serves on private company boards, and co-manages a Hong Kong-based investment group with his brother who resides there. That's a quick introduction for David. It's a real privilege to have him. I've known and worked with David for over 15 years. He's been an incredible partner to many organizations that I've had the privilege of working with. So without further ado, David, I'll let you launch your presentation.
Terrific. Mahesh, thank you very much for that kind introduction, and Neil for the opportunity to have a chance to speak to your members. If we flip to the agenda slide, you will see there are primarily 5 areas which I'd like to spend time on during our program. But first, we are in extraordinary times, and I've been speaking with a large number of business owners, both here and also abroad. And I've been terribly encouraged by their attitude and their resolve in facing and in going through this crisis. So we are in a different time. In addition, lots of what we are going to talk about here this afternoon has been written about recently in terms of how insurance might apply. And so some of this discussion probably won't be new or entirely new to you. So really my goals are to bolster your understanding about these issues, how the insurance works, how it might apply. Number 2, to share some fresh market intelligence. Whenever you have disruption, you have opportunity. And I believe there's a tremendous opportunity created by what's happening. And then lastly, and perhaps most importantly, how can you take advantage of these pockets of opportunity? So those are the primary goals and objectives. If we turn to the next slide, the question that we get probably more than any other relates to the disruption or the interruption of business. And a lot has been written about this, so I'd like to just take a step back and provide a little bit of context. It was, I believe, in November of 2002 that we had the arrival of SARS, which really caught insurance carriers by large measure off guard. They had not seen anything like this. Their policies were not entirely clear in terms of how they would respond to that. And so what evolved from that event in 2002 was insurance companies recognized the potential claims they could have, and they were left with little alternative but to make their language more precise. That was actually good for everybody. It was good for them. It's important that they remain solvent, and it was also good for business owners to have clarity of what policies cover and then what they don't. Now, what's happened is that when you really look at policies today, the most important item you have to look at is what triggers coverage. Does the event, whatever it might be, trigger the policy? So it's very, very important when you look at your own policy, because they're not standardized, but most of them have an exclusion that talks about they don't respond to communicable diseases. And because of that, you don't have a covered cause of loss. Now that sounds like insurance language, but the reality is that in most cases, that is what is happening. Now, there are some people that have overseas supply chains. You have to look at the international policies if you have a disruption from a supply chain overseas, because in other countries, the language is a little bit different. It's not completely different, but there are more exceptions overseas than there are in the United States. There's also some legislative changes that are underway. So much as we saw after 2011, the events of New York, the terrorist attacks in 2001, we saw that the federal government stepped in with insurance companies and they created a backstop for terrorism. There is a lot of discussion going on right now as we speak, whereby they may well put together some sort of a backstop for pandemics. And so that in the future, there would be a mechanism, perhaps guaranteed by the federal government, to respond to situations like this. And again, bear in mind, we've historically seen events like this happening, call it every 8 to 12 years. With the global nature of travel these days, one can reasonably expect that we may see more of it. Now, one thing that is unexpected has to do with the insurance rates for property. Many of you are likely aware that for the last several months, insurance rates, and particularly those for property insurance, have been steadily increasing. We saw this going into December. We saw no interruption of it in the first 2 months of the year. And people that had businesses near the coast, or that had businesses who had suffered problems with hail or other related things, saw increases anywhere from 10 to 30%, and in some cases higher than that. One thing that has happened is this crisis may not have broken the pattern of rate increases, but it has quite certainly interrupted it. Now that is absolutely essential, because what you really are now seeing is insurance companies are trying to be helpful. They are very much accommodative. And so they are willing to try to understand situations. And quite candidly, it's affected us from the perspective that with insurance policies for property that renew today, we would ordinarily be rushing or moving very quickly to try to secure our final prices with the idea that prices are going up. In this environment, we're likely pausing, because as the insurance companies become more accommodative, we may actually be able to get better terms for our customers. So very interesting development. We could flip to the next slide. Another area that we see as a major challenge of this virus is how it affects our employees. And there are a couple of things that are probably obvious and then there are some things that perhaps are less obvious. Workers' compensation is the type of coverage that insures and protects workers when they're hurt. So it takes care of medical costs, it takes care of wage replacement. And as many of you know, this is not a federal system, this is a state system. So every state has a different set of laws that effectively govern it. However, in the US, traditionally, things such as cold and flu haven't been considered as coverage triggers or items that workers' comp would respond to. That said, there are some situations today that are different. Many people on this call may have folks that are working overseas and in different parts of the world that have been traveling. Those folks are covered likely by international workers' compensation, which may have broader coverage than what we find in the US. So it's worth checking. If you have someone who is overseas, who contracted the virus, who's coming back in, a question you should be asking your agent is probably, how do we deal with this? And do we potentially have coverage on our global program rather than on a US program? Another thing that is unexpected and that we learned from an experience or two that we've had in China over the last couple of months is that you have to prepare for the passing of the virus and as it washes out. And what I mean by that is one of the factories that we were involved with, they had shut down for a period of several weeks, and they were getting ready to have people returning to work. And so the questions were around, what are the best practices when you have workers coming back in? How do you prevent them from passing a virus that they may have, but they don't know they have it? This became a critical issue. And so in this case, the company adopted what was known as the airport screening protocols, which essentially is what you find at airports, where they're checking temperature, basic things like that. What we added to that was a series of questions. Had they been exposed to someone? Had they been in particular geographies in the last period of time? There were 3 or 4 or 5 questions that were added, and anybody coming into that facility had to go to an entryway, had to be questioned where there was physical separation, and then if they passed the questions, then they would be checked for the temperature, and only then would they have access into the factory area. So this was a very interesting situation that really they were more concerned about the return of the employee than anything else in spreading the virus. If we could flip one more. A second area that we are just getting a tremendous volume of questions about has to do with employee benefits, health insurance, and benefit plans. And I think given what's happening, not only do we have events that are moving very fast, but we have legislative actions that have happened, which essentially was the passage of the Family First Coronavirus Response Act. And people are trying to sort out what that means. What are the implications for business and for my company? And so I think one thing that we should all be asking of those in my business that are in the insurance brokerage business is, what resources are you providing to help keep me up to speed and up to date with what's happening, not only of developments, but legislative actions? Again, things are moving very, very quickly. A second thing that's happening Most particularly, we're seeing it with big boxes, we're seeing it with hospitality, restaurants, is unfortunately a lot of folks are being laid off. And a question to be asking the broker here is, what extensions and reinstatements are available to me? That's a key question. We're seeing insurance companies, again, trying to be accommodative and understanding. They understand the crisis and they want to help. And so they are waiving things. Last week, for instance, we saw Geico, who primarily provides personal insurance, but they came out and said, we will not be canceling policies for lack of payment of premium. Chubb has said things recently along those lines, but not quite as broad, and the list is changing every day. Another thing that we're seeing is, again, what happens if you can't continue to pay premiums? There's about 15 states as of this afternoon that are extending grace periods, and that's terrific. Most of the carriers that we're talking about will extend an additional 30 days. So as people are trying to just anticipate ramping up again, what this does is it provides immediate cash relief by just extending. And the last thing is that oftentimes where you have enrollment changes moving more than 10%, there are clauses in health insurance contracts that allow the insurance company to re-rate, and the re-rating is not necessarily advantageous. As of, again, right now, we're starting to see movement with United Healthcare, with Aetna, with others. Again, they are being sensitive, but it's something that really, it's a wonderful topic to talk with your agent, your broker about. If we flip to the next page, one of the things that is probably not as high on the list, just from a risk standpoint, as you think about it, is general liability. Think about that in terms of people are not coming into your facility or into your store. We're all at home, or that effectively reduces risk because you don't have anybody coming on site. But a second thing that can happen is you can manufacture product, and let's suppose that the product has a medical application and it does not perform as intended and the virus passes to someone. So you could have issues with that. That's something to pay attention to, particularly given where the supply chain is. And I think something that most people don't expect is that general liability insurance is normally priced based on sales, estimated sales of the company. So normally what happens, let's suppose that that there's a company, and I'll just use an example. We have a high growth company that's like the hockey stick, proverbial hockey stick, and they have hit a brick wall because of this shutdown, and they're about halfway through the policy year. Ordinarily, what would happen is the policyholder would continue to pay premiums, probably monthly, and then after expiration, there would be an audit done where the insurance company would come in and they would make an adjustment. In this case, they revise the sales lower and they would give them some money back. That's not what's happening right now. The opportunity because of this disruption is that you contact the insurance company, you explain this disruption, and we've been successful and we've been getting a very receptive audience with them in terms of saying, we will make an adjustment immediately to the current policy, and we won't wait until audit. So you get cash back immediately. And number two, we'll revise the payments going forward to more accurately reflect what you expect. So this is significant, particularly if it's sales-based, or if you have vehicles or trucking fleets or things of this nature. If you're turning equipment back, you want to try to make adjustments very quickly. So again, having a discussion, really your agent should be having this discussion with you about how can you use this opportunity to fine-tune the insurance program to recognize significant changes in your revenues or in the assets that you're covering. If we flip to remote operations, obviously this is something that most people are doing. Here's the take, though, the important takeaway that we see. In studying, and at least in my career over the last 40 some odd years, people that are in the cyber hacking business or in the, let's call it the criminal intent business, what they look for and what they absolutely relish are opportunities that disrupt internal controls or process. This is why when people go on vacation, you often find situations that come up either with phishing, or you have people that are fabricating invoices or engaging in nefarious activity because somebody's out on vacation. So think about this disruption for a minute. This is the perfect storm. You have got people working from home. You have networks that are potentially not as secure. You have the potential for employees to use personal emails rather than corporate emails out of convenience. You have confidential information potentially now moving and being printed in people's homes. So you've got a document retention depending on what industry you're talking about. And you've got, importantly, a complete disruption of the process. So there is an enormous uptick in cyber activity right now. We are seeing it, we're hearing about it. It's something to pay attention to. We are launching in the midst of this a tool that looks at companies on the outside to identify areas where they may have gaps. That's an evolving tool that may help a little bit. But as I say, really the big problem here is more focused around the disruption of processes. And it's the perfect storm for people to take advantage of it. If we quickly move to the impact on the insurance. Yes.
Quick, I just want to remind all the attendees that they can send the questions through to us using the Q&A button on the screens as we get ready. I think you're making good progress, but I just want to remind the audience if they have any questions, feel free to send them over and we'll take them the order we receive it. Thank you, David. Go on.
Terrific. Thanks, Mahesh. The impact on the marketplace, we've touched on this a little bit, but again, I think the headline is just to keep in mind, it looks like we've interrupted rate increases on insurance, and I'm specifically referring to commercial or business insurance. The ability to potentially have flexibility where your policies may not be canceled because they're trying to help with payment systems, and not all companies today that are in business have the ability or are set up to make electronic payments or transactions. And I think another one that's really interesting is we have it labeled as taking friction out. So businesses that have renewals today that are happening right now, probably the last thing that they need to be doing is worrying about how they're going to handle the renewal of their insurance. They have other things that are totally consuming them at this point. So what we've been doing is looking at that and trying to ask the question, well, how can we make the process easier? So for instance, a few of the things that we're thinking about, and these would be good to talk to your agent about, is really things like extend policies by 30 or 60 or 90 days to try to free up space. It's also a good idea to do this because in extending it, you're taking pressure off. There may be a different set of applications that you can convince an underwriter to use, so it doesn't have to be the long form. It can be a short form or a summary application that's much easier to complete. So those are a couple of ideas in terms of just making the process easier. We talked about the interim adjustments, and the insurance industry again today is engaged actively in terms of trying to help, and that was primarily really in a couple areas. Go forward is this idea of the backstop, but in the immediate term, there have been discussions about would it make sense to retroactively adjust insurance policies to cover business interruption losses and claims. So that was one of the options. I see problems and challenges in so doing. Even if they were successful, what I worry about is the amount of time it takes to work through a business interruption claim. And insurance companies have to bring in forensic accountants and different parties. So a better way and a quicker way to potentially get funds from Treasury is through the banks, and the banks are staffed. The banks also typically have more detailed financial information about companies at hand, and they can deploy it more rapidly. The final slide is really some resources that we're putting out there. There's a link here for your use. It's updated several times a day right now. What we're trying to do is consolidate information for all different types of insurance so that you have a single place to go to. For any of you that are interested, we have a mailing list, and you can let Neil know, or you can email me. We'll be glad to put you on that. And my contact information is here, and also because of the number of questions about employee benefits, I also included some information about Dirk Hansen. So again, we're here to help. We understand the difficulty and the challenge that business owners are going through, and really it's about trying to ease that, and at the same time trying to take advantage of an opportunity in the marketplace created by the virus. So maybe that's a good time, Mahesh, to go into Q&A.
Yeah, absolutely. So, just to help matters along, I'll just quickly summarize David's presentation. It was very comprehensive. There's a lot of content here. I'm sure people have a lot of questions, but primarily you can break it down into 4 different components. Number 1, business interruption. Does the policy allow for business interruption loss, for example, through your existing policy? And I think the answer to that is clearly based on the current, what we know about the policy, the chance of coverage is relatively low. Number 2, we talked about workman's comp and how does that affect, and then we also talked about specifically the employee benefits portion of anything that relates to the employees. Then we talked about the general liability and how what we are seeing in the marketplace today. And finally, we ended with the overview about what working from home really means and what working, back at work would really entail from an exposure perspective. David, I think, you did a great job. Thank you again for being part of this presentation.
Absolutely, you're welcome.
Touch upon a couple of issues for us. So let's step back from, somebody once said there is, never waste a crisis to do something big, right? So when you think about the whole insurance risk strategy for our members, and we look at the gamut of options that are available to most business people, all the areas that you already covered, is there a different way to look at risk at a macro level than what we have been traditionally used to? Or you're a high level thinker, you're a strategist. So what's your overall take on how should risk be perceived based on our COVID-19 experience?
Yeah, that's a great question. Let me break it into a couple of different pieces, if that's okay.
Sure.
For many small business owners and even some mid-sized companies, there's a tendency to not really spend a lot of time thinking about risk. They buy a policy, they interact with an agent, they assume that most things that they run into are going to be covered. I think what we're starting to see is that in part of running a company has to involve really a more expansive view of what could materially impact the business. And again, I think it's instructive to look at something like the coronavirus because this was not the first one. There were others that came before it, and as we've globalized a little bit, we've seen this accelerate. So I think really taking a more expansive view of what could impact my business, and also I think part of this, is talking to customers of yours, suppliers of yours, being very much attuned to what's happening in your industry, to understand where those changes are that potentially could cause risk. I would say the same thing, incidentally, to the US government, because one of the fundamental principles of businesses nowadays, when you look at supply chains, is you identify where you have a sole supplier. And once you identify that, what do? You diversify away from it. That's how you protect yourself with multiple backups and multiple redundancies. Clearly, the US government didn't do that in a number of areas, and now we're going to be dealing with that. I think that type of process for people on this call is very instructive as well. Really apply that same type of thinking.
Thank you, David. I use the analogy of, most of our members in the chamber, they're familiar with some form of life insurance, and the life insurance analogy is appropriate here because most people have life insurance in order to take care of their families if something, were to happen to them, right? And I think similarly, when you think about insurance for your business, you're really, ensuring that the risk of something happening to your business is protected through an insurance policy. And therefore, you have to pay the same amount of attention to insurance coverage at work like you do on your own personal policy. It's just a matter of risk mitigation and covering people who work for you and, and their dependents, because we have both a a moral and responsibility to take care of the employees.
Yeah, yeah, and I think, Mahesh, pushing people that are in the brokerage business to sit down with you and to meet with you and to have to make sure they understand your business. They can play an important role in that, but to have that discussion and to take the time to do it, to understand and keep asking questions until the business owner understands what is covered, what is not covered, and what are the implications of that,
Yep.
irrespective of the size of the company.
So going from the strategic to the tactical, David, specifically when you talk about employee benefits, right, employee insurance, if I'm a business that is laying off employees right now because of this black swan event that we're all experiencing as we speak, what is the opportunity in terms of my guidance to employees? And every business is different, so we're looking for a generic explanation. But what would you tell the employee in terms of their ability to get coverage? For example, if they're not eligible for COBRA, would they be still eligible to latch onto the Affordable Care Plan? I mean, what kind of guidance can I give my employees that I'm potentially either have laid off already or planning to lay off in the near term, because I can't afford to keep them on the payroll?
No, and let me just be very, very transparent about this. I have a high level working knowledge of employee benefits, but that's also the reason why I included Dirk's contact information as a resource, because he is a specialist within employee benefits. People are doing some creative things that are in alignment with regulations and laws, but that provide flexibility when they are laying people off and furloughing. I rather than speak to it more specifically than that, I would defer to his expertise on that. And again, if any of you have specific questions like that one, Mahesh, I'll commit to getting an answer and circulating it back to you.
Yeah, thank you.
I think it's great.
We have another question from our audience. Is business interruption applicable to service industries? And I think you may want to step back and talk about where business interruption, which policy business interruption is normally covered under, and then kind of respond to the question specifically.
No, that's excellent. So business interruption in a service type of a business really is covering the loss of profits, the continuing expenses that you would have to keep a business running, and also extra expenses that you would have as the result of some sort of a problem. So by way of example, Roach Howard is a service business. We are an independent brokerage that helps people, families, and businesses. Several years ago, there was a tornado that came through Fort Worth, and it literally ripped the roof off the top of our building. Sounded like a machine gun, if you will. And papers and everything else flew all over the streets. It was just we were thankful nobody was seriously hurt in that situation. But we were faced with a service business impacted by this tornado. The business interruption helped us with several things. First of all, we had to get some alternate quarters, and it was at higher rent because there were obviously a lot of people that were impacted by that situation over in downtown Fort Worth. We had extra costs because we had to reproduce records, and we had to bring in labor to help us do things. We also had current obligations we had to meet. So in a service industry, really what business interruption is designed to do is to allow you to keep your payroll as much as possible, keep your employees, give you a pathway where you can set up shop elsewhere, continue to do business, and cover the incremental additional cost.
And David, just a quick follow-up on that question. On the service, when you say business interruption, is that a standalone policy, or is that covered under my general liability policy? How does that normally work for a service company?
Oh, I'm sorry, Mahesh. Yeah, so that is included most often under as part of a property policy. I would say in over 95% of the cases, it's included as part of that. So it's a specific component to it.
Got it. Okay. So if I'm a consulting business with, just to belabor the point, if I'm a consulting business with not a lot of real estate, I can still have property insurance and have the business interruption as part of the policy, correct?
Absolutely right. In fact, if you look at why businesses fail, services business included, many times it's the result of not having sufficient or having any business interruption insurance.
All right. Thank you, David. So one other, while we wait for other questions from the audience, one other issue that you may touch upon is, and I know you're, a subject matter expert on D&O policy. Is there any risk to directors and officers of companies? You talked a little bit about letting people back to work and the potential of them having, some level of latency on the virus issue. Do you see any liability caused by those to the directors and officers of a company?
Yes, I see a couple of things. So one of the areas would be if the directors and officers of the business are not exercising reasonable caution, reasonable standard of care, and people are coming in and then you have a subsequent problem, I think there potentially could be exposure with that. Another one that is closely related that impacts the directors and officers is in the environment where you're downsizing or laying off. Whenever you have a situation like this and you're making strong moves, you have to be careful because some of those workers may have a case to come back and say they were taken off the payroll because they may allege that they were more senior people, they were older, they were discriminated against. And so employment practices insurance or employment practices liability insurance would really be what would protect those directors and officers. So that is a very real exposure and something that folks have to watch. And, companies also have to comply with things like the WARN notices as they begin to downsize. And if you don't comply properly, the directors and officers also have issues. If you're public, the biggest thing is being very careful about guidance around what you're seeing, operational guidance regarding sales, profitability, earnings. That's part of the reason why you're seeing almost everybody universally that's public suspending guidance of any sort at this point.
Thank you, David. In the interest of time, Neil, did you have any questions from the members? I have covered ground with David. We don't have any other questions from the audience. David, did you want to make some closing remarks? And then I'll hand it back to Neil.
Sure. Again, first of all, just very thankful that we're in DFW and that we have organizations that care about members, so that we can do things like this and speak directly to them. Our industry is here to help. Whether it's your broker, whether it's the insurance carrier, they are here to help. But it's important to determine how you want them to help you the best. And that's where I think having a conversation, if your business is impacted by this, and I suspect most are, having a conversation with your broker about proactively, what is my situation if I'm considering making some moves, like laying off or doing other things, right? Maybe changing how we operate. Sit down with them, because every one of those moves has insurance implications. And so that gets you out in front of it. And then on the cost side, as I say, I would look at and ask questions about, in my situation, are there things that we could do to take advantage of what's happening today, given this disruption?
Thank you, David. And a lot of this, a lot of small businesses treat insurance as a necessary evil. So you treat every renewal as an occurrence on the calendar. I would encourage all the members to look at insurance from a holistic perspective, meaning that once a year you need to meet your broker, go through all the coverages that you have, make sure that you understand where the risk is, and there's always going to be trade-off between the policy premiums and coverage, but make the trade-offs consciously. Don't let the calendar drive insurance. What I mean to say is, if you have 3 or 4 different policies renewing at different year, a lot of times we renew that through inertia, as opposed to using a volitional act of reviewing the insurance to make sure it fits our needs. So please take the time to consolidate the policies, have an in-depth conversation with your broker. And I'm sure David, is happy to help engage you guys in the conversation, but have an in-depth conversation with the broker, understand the risk and the premiums, understand the trade-offs related, and more importantly, understand how it affects your business. Insurance, a necessary buffer for the business. It's a cost associated with insurance compared to the potential benefits is relatively small, but look at it strategically and not necessarily as a cost issue. So I would encourage you guys to do that, and stay safe. Thank you again for joining us. Thank you again, David, for being here with us today. I know you're very busy, taking a lot of calls from your customers. With that, Neil, I'll hand the baton back to you so you can make closing.
Thanks, Mahesh, and thank you, David, both for your time and for providing this valuable information to our members who are trying to figure out how to think through their business during this challenging time. I just wanted to make a couple of quick announcements. Again, all of the webinars that we're hosting will be posted on our YouTube channel. So if you missed something either today or on Monday, feel free to review the information through the YouTube videos that are there. The second thing I wanted to let you know about is also related to the webinars being posted. Any updates and materials, for example, the PowerPoint presentation offered by Herb Austin on Monday from the SBA, all of those resources are also going out through our weekly newsletter, which is actually going out with more frequency now. So please make sure you're signed up to receive that. You can sign up at our website, www.usicocc.org. www.usicoc.org. You can also Google the U.S. India Chamber of Commerce DFW, and it should be the first link that pulls up. On the homepage, there's a place for you to enter your email address to sign up for the newsletter. So I would encourage you all to sign up for that newsletter. We're sending out business resources almost 2 to 3 times a week. So we're trying to keep you as up to date as we are receiving information. And the final thing related to the webinar series is that this Friday, we had originally scheduled to do a tax webinar. However, due to the fact that we're scheduled to pass a third piece of legislation this week, and it will also have tax implications, we've actually pushed that webinar back to Monday of the following week. So that's Monday, March 30th. And we will then review comprehensively many of the tax implications that may be affecting our businesses at that point in time. So for Friday's webinar, we are working on hosting Dr. Madhukar Trivedi. He's a professor in the Department of Psychiatry at UT Southwestern. He also serves as the chief of the Division of Mood Disorders, and he's the founding director of the Center for Depression Research and Clinical Care. And he is a leading expert on mental health and depression here in DFW. And he's going to be talking to our members about how to cope with some of the stress coming out of COVID-19, especially for entrepreneurs, small business, and mid-sized business owners. So I encourage all of you to log into that. It's always good to kind of do a self-check periodically. And so please do join us for that. We're hoping to host that Friday at 3 p.m. at the same time as when the tax webinar was scheduled for. But if the time changes, we will be updating that in the newsletter again. So look to the newsletter. You can also go to the Chamber's Facebook page or our LinkedIn, where we are posting about the webinars. So with that, I'd like to thank you all for joining us. And if you have any questions, the Chamber is open to hear. It's open and here to serve you remotely. All of our staff is available to serve our member needs. So don't hesitate to reach out if there's anything we can do to help you during this time. With that, thank you so much. We're right at the end of the hour here. So thank you so much for joining us. And again, if you have any questions, please reach out to David or to the Chamber. Thank you all.
Thank you.